Okay, welcome everyone. Today being Saturday, let's just take a very quick trade recap of the trades we had this week on Euro USD, mostly on the VIP mentorship group. So if you watch look at the range I've made with these lines, straight line from this points to these points is is just the range of what happened this week on Euro USD and roughly we had 150 something peeps. So I'll do my best to actually take us every step of the way what really happened and everything. So let me just start drawing out my lines and just pay a very close attention. Okay, let me make these three black. Okay. 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 Let me set back to. All right. We are around here. So just keep your eyes on the screen. I'm just trying to mark out the charts and explain step by step what really happened from Monday to Friday. Okay, actually on Monday we literally had no trade on Euro USD. Yeah, but we said it categorically that the order flow was a sell. Yeah, the order flow was a sell on Monday. This was on Friday NFP. So there was, if you watch this level here, let me draw these again. So this was, if you watch this level here, let me take this out so I can, let me use this. Let me take this. If you really watch this level here, you will notice something. I said on the group, the mentorship group chat, I told them that the order flow quite alright is a sell, but I will not be engaged in a sell. Specifically, I told them that I'm not going to be selling until I want to see these people do one thing. I want them to take out liquidity above this. Okay, as at that Monday, we don't have this. On Monday, I traded other pairs, but let me just focus on Euro USD because we really had free money on Euro USD. Free money. So remember, I told in the group chat, I told us something. I said the order flow is a sell, but I will not be engaged in the sell because of. Let me just look at what the market is doing, and then the reason I refused to sell was that I noticed that the market made a double top here, and on Monday it was this Friday high. It came back to it around London session, and made a double top here. I was like, no, I'm not gonna sell this. And on Tuesday we noticed something. The market, if you go to the 15 minutes, you notice that on Tuesday, okay, let me go to the 15 minutes. Let me take this down. So on Tuesday we had this was on Tuesday. Okay. Let me draw something out. Okay. So on Tuesday, the market was still going down, and some persons in the mentorship chat were like, mentorship group chat were like, wow, look at the we're in a sell, we're down 100 and something pips. I was like, no, I'm still not gonna sell. I'll be involved in a sell when they take out that double top, because that double top connotes there are others resting up there, and there must be a raid on liquidity. There must be a raid, and there must be a raid before I step in. At least after the raid, a break in structure, and I'll look for the zone where the structure level took impulse that broke the market structure that changed character, and then from there I will pull my trigger for a sell. And around on Tuesday during New York, we noticed something. Let me take this down. On Tuesday during New York, we noticed that there was a change of character around the zone. I can remember on the 15 minutes there was a change of character here, and I told them on the mentorship group chat. I told them that the market has changed character, and we should be looking at a short-term buy to the raid of the liquidity, to a short-term buy to the clearing of this double top. So around here, around here, the market after the Tuesday New York session, the market changed character here, and so I quickly went to the chart. I marked out this level. I marked out this block here, this block that sponsored the changing character, and after marking out the block, I took note of the imbalance after the block, and I set my order at the 50% of the imbalance, and it was so precise actually. So this was actually the imbalance, and my order was 50% of the imbalance. So I measured it using this gam box, 50% of the imbalance, and it was so precise. So when the market, I remember, as I rightly predicted, I said this is a short-term buy, but our goal while we take this buy will be to clear the double top, to clear this double top. So I took this long position, and my peep was actually 20 pips, and I entered somewhere around the 50% imbalance, factoring my spread. No, around 20 pips. I could remember 20 pips. I think I went lower to the 5 minutes or thereabouts. Let me get this. Okay, yeah. To the 5 minutes, I was around the 5 minutes, and somewhere around here, I think so, somewhere around here. But I had 20 pips on, so let me just put it here. 20 pips, yeah, because actually I knew that is a trade that is gonna go to some extent. So I pulled my days, and I was targeting up here. I could remember I was targeting up here, and I left with I could remember I left the market with 89 pips. So I had 89 pip gain. The 89 pips gain. Let me take this to red. Okay, I think green will be better. That's profit. So let me return this back to the 1 hour. 89 pips gain, and that was it. We went so up. We went so up that very Wednesday, because this was on Tuesday. There was a change of character on Tuesday, and there was a retracement to this very block, and my order was peaked 50%. If you go to the 15 minutes, you will see it very clear. I placed my order on this very zone, 50% of the imbalance that was formed on the 15 minutes time frame. So my order got filled at the 50% of the imbalance, and it was so cool. Like the sniper entry was so good. And before I could remember, before 11, I was, before the time was around 11 a.m. GMT +1. I was in quite a good number of pips, so I just quickly moved my stop loss to entry. So I was having a risk-free trade. Then on Thursday, actually we didn't take out this very high that one is, like, remember, I still held on because my interest is actually to take out this very high here. I took 89 pips, I could remember 89 pips, And if you go to the lower time frame, you will spot either 5 minutes or the 15 minutes or so. You will spot a block here. Let me actually show that to us. Likewise, 5 minutes. Let me show something here. Okay, where is it? Okay, yeah. On the 5 minutes, you notice something. Look at this now. Look at this. You see this block with a very good inefficiency contained in it. Let me take this. So let me keep it running. Let me just make this 1.5. Okay. Wait. Let me just draw this back. I'm just trying to extend this zone to the future of where we are currently. So just pay attention. This is okay. So this is actually it here. So I left with 89 pips. I left with 89 pips because I knew that the market must do two things. The market will take out this equal high, this double top here. And after taking out this double top, I knew that definitely that the market will feel the imbalance above up to the other block, because they've generated enough liquidity. Because look at what they did here, double top here. They came here, double top. So that was giving me more confidence. First double top, first another second, another double top again. So that was giving me a very strong confidence, because I knew that there will be nice orders resting above here. And the moment they take out those orders, the moment they pull those orders into the market, for the people expecting for the people that have placed their buy stop, expecting that the moment the market breaks above it, it's going to keep flying higher. I knew that since the order flow is sell, looking at the bigger time frame, the order flow is a sell. I knew that the moment we step into here and activate this buy order, we're going to use them as liquidity to drop further lower. So and I had two orders here. The moment I had 89 pips profit. That was what I was heading to. Actually, I had a risk-free trade running, and I quickly jumped to the. I could remember on Thursday, I quickly jumped to the 15 or 5 minutes. The 5 minutes, yeah, the 5 minutes, and I was looking at what the market is going to do here. So the moment around after that ECB meeting and all those stuffs, I saw where the market quickly hit my take profit, and there was a very sharp reversal during the New York session. It was so sharp. I barely caught this downfall, but actually we quickly went with them. Very few pips. Then on let me move this to the 1 hour. Very few pips. Then on Friday we're around the zone, and here comes the CPI from the US. That one inspired, should I say, induced another level of fall, and that was so massive. At the release of CPI. That was around 1:30 p.m. GMT plus 1. I could remember to 1:30 p.m. So it was around here, and it was a massive fall. So that was just as simple as it is. When the order flow was a sell, and I was spotting this liquidity, this double top, I refused selling. Even on the mentorship group chat, I told them it's not wise to sell. We want them to take off those equal levels, and they've generated enough liquidity to sponsor the next move. So if you step in at this point when these double top have not been taken out, they're going to be using you as liquidity. And after the rate of those levels, here comes a very massive impulsive move, and that was how it happened in the market exactly. So next week we're going to be looking at this again. If you look at this chart now, you spot something here. Let me show you this. You spot something here. So this level is going to be quite sensitive for next week. If you extend this to the future here, this level is going to be this level is going to be quite extensive for it's going to be quite massive. So it's a sensitive level. This very level here is a sensitive level for next week. So on the mentorship group chat, we're going to be discussing it as it unfolds live. So this level will be quite sensitive for next week. So let me just extend it. We're going to be quite sensitive for next week, and we got a lot of imbalance here, but we don't try to forecast our trade. We'll react to what the market is doing in line with our entry rules. That's the safest way to play the game. And if your stop loss is being hit, you take it with a good heart, and if your take profit is being hit, that's nice. You move over to the next trade. No reason to massage your ego at a win or get heartbroken in a loss. So the game of trading is a game of risk control, and the money will just keep coming. So that's just it all. So for next week now, we're going to be having our eyes on this zone and on this level. Whatever the market does here, and if the market gives me a solid change of character on the 1 hour on this level, a solid change of character on the 1 hour time frame on this very zone, I'm going to pull a trigger for a strong sell. So, and honestly, down here, I'm going to be looking at change of character to the upside, and that's going to be a short-term buy. That's just it, as simple as it is. My watchword has been keep it as simple as possible. If you're looking at my chart, you will notice something. There was actually no, thank God, the transparency. The people on the mentorship group chat, they are seeing it for themselves. The transparency is quite top notch. We're predicting the move. I'm telling them what I intend to do as the market. So I'm trying to go by the footprints of the big player. We don't control the market. We don't give direction to the market. We only follow what they do. They take this step. We know that when they do A, we expect when they take the A step, we take the B step, and then return we all anticipate to see a C happen. And that has been the simple formula we're using in this market. When the market does A, we'll do B, expecting a C. So if the market does X, we're gonna do Y, expecting a Z. And that's just it all. So I think for next week, what I just said about this very zone and this very play out we're expecting here is just going to be one of the most simplified approach or outcome that anybody is going to take. So keep it as simple as you can. Thank you.